While I was in my think tank, I had this thought come to me. And by the way, my think tank is just the shower, right? It's nothing really special or anything like that. Sometimes it's the car. For whatever reason, I get my best ideas like when I'm taking a shower, or if I'm doing something where I can't take notes, you know what I'm saying? And I gotta, so I had to hurry up and get to this camera, so let me stop rambling and get to it. So anyway, I had this profound thought that came to me while I was in my think tank, right? It's also controversial, which I'll try to get to that part if I don't forget about it, but I need to make the point first before I, forget why I came here to make the video. So anyway, how do you know when it's the right time, or if you can, or if you should, right, be using credit to trade with, right? And so let me be clear about that. So by credit, what I mean is credit off of a credit card, right? You somehow figure out a way to pull money off your credit card to trade with, or you take a loan from a bank, or you take a loan from a private lender, right? Or you take a loan from your family or friends, right? So that's what I mean by credit. I'm not necessarily talking about the leverage that you can get by opening a Forex account and, whatever broker you go with, they have some leverage that you can use. I'm not necessarily talking about that one. That one's a little more simple, with Forex and futures and options and all that stuff, the ability to leverage a small amount of money in your trading account. Really, that just comes down to risk management, right? And, there's ways around that. There's tons of videos on that you can go into, but I'm talking about credit in terms from a credit card, right? Or some kind of loan from a bank or a private lender, or even from your friends or family, okay? Now, the way to know when you're ready for this is when you've experienced different market cycles and when you've experienced a drawdown and have recovered from that drawdown, okay? And the reason why I'm addressing it from this way, because there's going to be an emotion. The first time that you go through a drawdown, you're likely to experience emotional trading to where you're going to start making bad decisions, and it's going to get worse the more that you need that money, right? Now, this is going to depend on how much you care about your credit score, right? And even you have a credit score with your friends and family, but let me not go down that rabbit hole. But anyway, this is going to depend on how you care about your credit, right? So if you don't really care about your credit and you're just going to use your credit in order to get some free cash real quick, and if you can pay it back, cool. If you can't, whatever, then it's probably not going to matter to you as much. But let me make this clear first before I continue on this. I would highly recommend to not trade with credit, right? So that's like the industry standard, the overall consensus in this, in this environment or in this industry is to not use credit to trade with. And I am in 100% agreement with that. But people will be people. People are going to do what they're going to do. You're going to do what you're going to do. I highly encourage you to do what you're going to do, but I would not recommend to use credit. But if you're going to do it, I say do it in this way. All right. So I got all those points made. So let me keep going with this video. All right. So you want to make sure that you experience drawdown so that you know how you're going to respond to that type of situation when it happens again. So let's say that you started trading in 2020 and you've put some money in and it's been up ever since, right? If you haven't experienced any real drawdown and you start to say, oh, well, I made this amount of money, let me put some credit in this so I can keep going. I can just keep multiplying my profits and all of that stuff, right? And then 2022 hits and everything goes south and you don't know what to do with that. Well, there's a good chance that you can end up losing everything, right? Your profits, whatever you put into it initially, plus what you used as credit to give you more capital to trade with, right? So you want to know, before you even get to that point, you want to know how you're going to respond to a drawdown and seeing those funds start to decrease in your account when the market cycles change and you find yourself in an environment in which you haven't experienced before and you don't know what to do, right? So in these situations when you experience this drawdown, I'm just going to briefly hit this. It's not so much about the market and what the market is doing or what the banks are doing or what politicians are doing or all this other stuff that's external to you. It's really how do you respond to that, right? So either you're going to, there's a lot of different ways that you can respond to it, but the key is how you respond to that. And you want to know how you're going to respond to that. And if you can come out of that on the right side, right, with profit, or that maybe you took a little bit of a hit, but when you got back to your zone, now you're starting to grow your capital again. You want to be able to make it through that drawdown phase and begin building your account again, right? If you haven't done that yet, then it's not going to be easier just because you got more money, right? You need to be able to do it with, regardless of what your trading capital size is, you need to be able to experience drawdown and make it through that drawdown and start to grow your account again. So you can, if you don't have a lot of money, right now to start doing this with. You can sim it, right? You'll still get some sort of, if you care about being right or wrong, you know, you'll get some sort of emotional triggers with sim trading. You can also, you know, like trade futures. You can trade the micros of futures, or you can, you know, there's a lot of different ways you can do it. There's a lot of different videos talking about, you know, how to trade with a small amount of capital. But, you know, start where you are with what you have, right? That's the point. Start where you are with what you have, right? And then once you've been able to successfully go through that drawdown, now you know that you're ready if you want to, right? If you just got that burning urge to do it, to trade with credit, now you know that you can do it, because when things go south and things go wrong, you know that you'll be able to handle it, and then, you know, keep going, and you'll be able to make the right decisions so that you can pay that credit back, that you can pay that debt back, and you can leverage it in the right way. Okay, so that's really the point I wanted to make. I don't want to hold you up too long. I just wanted to make that point real quick. I know something that came to me. I thought it was pretty profound, and I, you know, could help some people, because at the end of the day, you shouldn't be trading with credit, right? You shouldn't be leveraging credit cards or taking loans and stuff to trade with. You should trade with only money that you can truly stand to lose, right? But you're going to do what you're going to do. So with you doing that, I want to make sure to try to give you the best information that I can give you, so that you can do it in the best, most efficient way. All right. So let me know what you think in the comment section below. If you found this helpful, hit that like button, of course, so I know that I'm actually giving information that's helpful. And, you know, let me know what you think in the comment section. I'm kind of curious to know if anybody has ever traded with credit before like that. I haven't done it, but, you know, I'm kind of curious about anybody else. All right. And, you know, with all that being said, I'll see you on the next one. Trade it easy.